Hello, 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 everyone. Happy Friday, non-farm payroll Friday, which, if you've been watching the markets, had a minor reaction to. Going to bring Bob on in a minute or so. So we'll discuss those numbers then. Again, pullback going into it. You can see, just cover a couple things. We have dropped back into negative gamma. Just keep that in mind. It can also amplify if there is a bounce back move, and it can amplify any moves up or down. The neutral gamma is 40.58. That's the level you're going to watch for in the S&P. And unless you're a Boone Doctor Cracker Barrel fan, it was a very boring earnings day. It was all NF or N non-farm payroll Friday today. You can see pullback to S&P currently down about 160 basis points. Good morning, Rems of Fall. Good morning, Patrick. Good morning, Jacob. Good morning, Gary. Good morning, Martinez. Good morning, Options 22. Coco wants to know if Bob's still holding his long. Coco, really? Did it hit the target? Negative gamma, the theme of 2022. Yes, it has been a theme. Let's just bring on Bob, because we got to go through these numbers. We got to get Bob's take on it. There you go. Bob, did it hit your target?
No.
All right. Did you bail out?
It's not even close to my entry. Why would I bail out?
You got to trade minute by minute.
Second by second, candle by candle, as Mike preaches against in his candlestick math.
Yeah.
Don't live candle by candle. Available for sale at Path Trading Partners. It's literally nowhere near the September close. I bought the October open. Why would I bail? It's just, I'm not going to address this anymore, Coco. You know everything you need to know.
But Bob, we got a red candle.
Candlestick math available for sale for a very low price. I don't even remember what the price is because we don't ever advertise that we sell anything. It's very cheap. Coco, get it? I'd give it to you complimentary, but I can't. You drive me crazy.
All right. Why'd the market sell off, Bob?
Good news is bad news.
Is that what it is again?
Good news is bad news. Here's an interesting thing about this number. Not only was this number way higher than expectations, and the whisper number, according to Bloomberg, was 183. So way higher than the listed expectations, almost 80,000, well, exactly 80,000? Yeah, exactly 80,000 higher than the whisper number, according to Bloomberg. We lost 186,000 people in the labor force. This is why I said yesterday I found it hard to believe that the Fed research shows that 2 million of the 3.5 million people who did not come back to the labor force after the pandemic were early retirees. So did this 186,000 people retire? I don't know what happened to them. We saw the unemployment rate stay the same, but again, we saw a drop in the labor force participation rate. So you could add jobs and have the unemployment rate stay the same because it's at a lower level with labor force participation. Average hourly earnings way stronger than expected, and last month revised higher. This is the key point. This is why I said the number itself almost doesn't matter. The average hourly earnings matters quite a bit more. You had the month over month up 0.6, double the expectation, and a tenth higher than last month. And then year over year, 5.1%. Year over year, wages have grown 154% in the last 18 months, year over year. The wage growth is 154% higher than it was pre-pandemic. That's massive. So that is the wage spiral, in my opinion. Another interesting thing I saw, we lost 30,000 retail jobs coming into Christmas. I don't even know what to make of that. There might be some sort of seasonal adjustment that I don't understand, but generally when you're going into November, you can explain a number like this by the temporary retail jobs, which are theoretically taken out by seasonal adjustments. So we could have a seasonal adjustment that is just, maybe we didn't have an actual net loss of retail jobs. The seasonal adjustment was just too big. But that's why I hate all those adjustments. Like you should be able to just leave it the way it is, and people should go, well, a lot of retail jobs are added. That's why the number's so high. But instead, they try to seasonally adjust these things out to smooth out the numbers. And it's just so we have to interpret whether the seasonal adjustment was wrong or not. But either way, this number is way too strong for the Fed. I just pulled up the CME watch tool. The rate watch tool dropped to 72% now. The
Yeah, that's what I
probability of
had
that 50
earlier
basis
on my
point.
last refresh before the live stream. I was just seeing if
Wasn't
it,
it in the 80s yesterday, Mike?
yeah, it was in the 80s for the 50 basis point.
Yeah,
I
that's what I
still think
mean.
they're
So
doing 50 basis points even with this
I
print.
do too. I do too. But I just thought I'm looking at the compare tab, and it had yesterday's close at 78.2 probability. So it doesn't seem like as big a drop. But I thought during the live stream we saw it in the 80s.
We
I don't know.
have to
You
go
guys can go
back
back
and
in the video.
watch it. That's
Yeah.
that's the beauty of it. But I mean, this would do more so for me is 50, and then they could have, if things stayed strong, they could keep the 50 going in Feb.
One of the analyst shops this morning, I don't remember which one it was, said 50 and then stop. So nothing in the February meeting, nothing in the March meeting. This non-farm payrolls doesn't say that at all. This is exactly what Powell's pointing to now, rather than prices. He's obviously mentioning prices, but he keeps talking about we need to get some slack in the labor market. Translation, we need to get some job losses. And we're getting the opposite. Now, I will say that and then I'm pretty much out of commentary, the continuing claims number continues to climb. And that's a pretty good indicator of recession as well. So I'm in the recession camp. I'm still long for this quarter. I'll probably move my stop to break even, but I haven't done it yet. And was there some OPEC news?
Well, I didn't hear
Well,
anything.
there's a virtual meeting, and there's a virtual meeting this weekend.
Yeah, this weekend.
Yeah, but it says OPEC plus oil export cut, blunted by surge in Russian shipments. That's a Bloomberg story. So their exports were cut. That's a weak demand sign. So I was listening to Bloomberg this morning at the gym, and they were saying, shouldn't, if they cut exports, shouldn't crude oil be rallying? But that's not what that means. An export cut means that their exports were supplanted by another supplier. So it doesn't mean that they should cut production, because it's not necessarily a demand disruption. It's a demand shift. They have to find other buyers. That's what that means. So crude oil is actually down a little bit. But that's it.
That's
That's all I
well,
got.
we're keeping you up, obviously. Sashi wants to know: can the next 2 months inflation be higher than expected?
Say that again. What was that?
Can the next 2 months inflation be higher than expected?
Yes, absolutely. I mean, I'm not predicting that, but you got to look at the month over month. Okay, you have to look at the month over month. Don't worry about the year over year anymore, because we're going to start getting into that base effect thing in the next 2 and 3 months. Jake said the furniture store thing. Put that Jake comment up, Mikey, please.
We're Bob, my wife went in a Big Lots yesterday to buy a couch, and they told her that the country's largest furniture manufacturer began to layoffs this week and refused to sell her their show furniture.
So that's interesting. Did they say we won't let you order one because of the layoffs, and we won't sell you the one in the store? That seems counterproductive. So they're going to keep one in the store that you can't order.
Or you can't buy.
Yeah, something's off, Jake. You might maybe they just wouldn't sell her because they want people to order and they won't sell the one in the store. I'm guessing that's what it is. God, I'm tired.
Yeah, we've kept you up now.
No, it's not that. It's leg day, and I wanted to get back for non-farm payroll, so we went pretty early. And leg day is always a killer.
Oh, leg day's the easy day of the week.
Oh, then you're not doing it right.
I hate leg day.
Everybody hates leg day.
Come on. Uh, we're already being told the supply chain issues are coming in automotive in Q1. Buy a car now if you need one.
That's good advice. Thanks, Sterling.
Yep.
Did I hear a commercial this morning, Sterling, for Nissan All Electric? I hadn't heard about that. And I thought I heard a commercial and I did a
Or,
double take, but
or
don't.
Toyota, you mean?
Oh, I'm sorry. Yeah. No, the commercial was for Nissan. I forgot Sterling's Nissan.
Sterling's Toyota.
I'm sorry. Yeah, Sterling's Toyota. I forgot about that because I asked him for a Tundra. But yeah, I thought I heard a commercial for all electric Nissan. I didn't know that was happening.
Well, they didn't believe they could restock anytime soon, which I agree is counterproductive. Why have it on the showroom?
Exactly. Sell the one on the floor and bring the money in.
Who knows?
Sterling, Nissans are junk. Sterling, give me a deal on a Toyota, and I'll go all over social media and TV and agree with you. One of my best friends runs a Nissan dealership too, but he says it's not worth it for him to ship one to Florida. He's back in the suburbs of Chicago.
All right. Well, let me get to the
Sterling, at
charts real
least
quick.
half price. I mean, come on.
All right. Let me
All right.
get to the
I
charts
gotta
real
go.
quick.
All right, guys. Cheers, everybody. I'll talk to you Tuesday.
Thanks. Bye. All right. So we have the pullback so far this morning. Here's what I am watching for. We got the pullback to the prior breakout area that we blew through. The first breakout area, we had two breakout areas. We've come back down to that same levels I had overnight to watch for on the bigger pullback, 4,008. What was the low so far today? 4,675, a little bounce. Also, I'm keeping an eye on this. The move right before, not that one. This one. The move right before non-farm payrolls to see this 4,004. So 4,004 to 4,008 is key support. We get the daily close below 4,004. I'll continue to watch for the bigger pullback, but all we've done, remember I said there are some exhaustion signals coming up from DeMark stuff. I'm going to be running through a bunch of those myself in a while to see where we sit with the exhaustion signals. But so far, the support is holding. And even if that support were to break, you still have massive support at 39.50, then 39.14. So there's a lot of key levels. This is just a pullback after the over exuberance from the Powell speech. And there is no, I saw somebody mention we have a double top on the daily. There's no double top on the daily. This is not a double top. This is not a double top. This is not a double top. The major key area I am watching is this 39.50, though, not necessarily today, but for a more, if we start getting a daily close below there, yeah, there are key stopping points below it, but you get below the daily rotation zone, and that could do some short-term damage into the market. We could also stay more choppy for the rest of the year with a pullback, then a slight rally from Santa, and just end up, somewhere 3,900 to 4K for the end of the year. I'm also going to be watching for major non-farm payroll birth death model revisions coming in January, so that'll probably shock the crap out of people. NASDAQ did drop below the breakout level, back down. The key area, my other key area was this 1816 to 1800. It got all the way down to 1750 and bouncing back to 1800. So that's still watch this 1800, 1820 into the open. If we break back below 1750, which on a sell-off, that'll be the next level. Below that, I'm going to about 11.6. You have a little support base around 11.6, 11.588. And yes, the potential double top is still in play in the NASDAQ, but that won't trigger before a daily close below 11.465. In the spiders and, in the spiders and the Qs, no double top in that. going to be the gap down. Key support still coming in at 400. Pre-market, we're trading just below 402, 401.75. Resistance is now 402.31. Then on a rally, if we do snap back about 403.80, then yesterday's lows are the key levels I'm watching on any rally, when yesterday's lows were 404.75. On a sell-off, I'm really focused on that 400 mark. If it did turn into some more of a bloodbath, key areas down below that would be 399 from this still gap down open, and then it would be back to about 397 areas. It's a little in front of that, 397.75. Major support is coming all the way back to 393, so we'd have to have a lot of damage done before that. The Qs, you still have the assets still in play, the little potential double top. The Qs with the gap down. Resistance level on the Qs, we're looking 288.16. 289 is my key resistance. Then above 289, we don't have much until yesterday's lows coming in at 295.75. Oh, yesterday's lows coming in at 290.88. Major support, my first major support is 287.50 in the Qs. Then I will stair step down to 285.40. And then if we have a more of a bloodbath day, major is 283.65. Keep an eye on the dollar index. It was rallying stronger with the non-farm payroll, trying to put in a little reversal, but backing off since then. Still, key line in the sand is this 104.20 area on a closing basis. Roughly where it closed yesterday, 104.31. Gets a little lower close. We could see some substantial damage, but I'm going to be watching for more of a potential short-term bottoming pattern. And you see here's the big rally and the little pullback so far. So yes, this was a little mini double, but here's your key levels to watch for, and I would be watching the dollar index. On a pullback, this 104.63 to about 104.48. If this continues to pull back, watch for the markets to turn around into the open. The VIX, a slight up move, but now unless we really start running above right about 21.20, nothing more substantial as yet. Yes, the bigger double bottom is still in play. The notes, you can see here a little pullback outside day right now, but finding the key support after the gap fill. We had this gap still technically left behind to 113.24 and a half, and we filled that in, finding that as key support. So nothing has changed besides a little pullback short term with the notes. Crude inside bar. Remember, we got the OPEC stuff. I'm just going to be seeing if the double officially triggers. Other than that, it's just a pause after the %B entry with a trailing stop. Where else? We'll loop back around. Euro pullback to support area and then a little bounce back. So, we could see some reversals back up into the open. It's still, you got that little drop, and now the dollar's backing off. The pound and the euro are rallying back. Yeah, but you do have, I saw Sterling Point posted this. Yes, you do have a little potential doubles going into the open, like in the S&P, above 403.375. That could be a little snapback move. Where does that take it in the context? It could potentially take it to the breakdown zone. So at this point, I'm going to bump up this to more of to the breakdown zone, so a little higher targets if there's that snapback move. Uh, that's really about it. The only way I'll get even more bearish is if we have negative ticks coming in and we start breaking below this 4,008, but then you're going to have that key around number of 4,000, and then you're into the remainder of the clear path move, which we've already tackled a bunch down. So keep in mind, still remember to use your harmonics. 4,450 would be a key level on a longer term, when I say longer term, 1 hour, 4 hour closing basis to start targeting a potential bigger pullback. With that, I'm going to have to run into the open, and we shall see everybody after the close. Again, the live stream might be a little delayed. I'm recording the Jim Iorio Futures Edge podcast this afternoon, so there might be a delay in the start of the live stream this afternoon. I will let everybody know. Thank you for tuning in. Bye.